index that's trading with cuts of very close to 4%. You have the small cap index that's trading with cuts of over 4%. And in fact, the market breadth will tell you what a stark picture it is. It is, in fact, just a handful, 200 or so, or in fact, only 80 or so gainers at this juncture. And you have over 2,000 declines right now. In fact, a worse picture than it was even about half an hour, 45 minutes back. And the sectoral picture is even more difficult to look at this juncture. The biggest losers are the metal pack, which is down over 5%. You have the PSU banking index, which is down about 4.8%. Realty is down close to 5%. IT is down 4.5%. The PSE index as a whole is also down over 4%. In fact, you name it. The consumer goods are down about 3% or thereabouts. And if anything, they're performing better than some of the other pockets of the market. Let's bring our experts on board. We've got Samir Dalal of Natwarlal and Sons, and we've got Rajesh Palvia, who's the Senior Vice President, Technical and Derivatives Research at Axis Securities. Gentlemen, it's a tough day to be commenting on the markets right now, but I think the question that a lot of my viewers will have is, where do you duck for cover at this juncture? Rajesh, if you have open positions, what do you suggest to do?
Yeah, good afternoon. So, looking at the sell-off in today's session, we are now almost trading near to 50-day moving average. So, I think 23,800 is now the immediate level where the 50-day moving average is we have for the Nifty. So, if it breaks below 23,800, so I think one should close some of the long position, because below 23,800 there is a possibility that Nifty may continue furthermore sell off towards 23,250. That's the 100-day moving average for the Nifty. Bank Nifty is already slipped below to 50-day moving average, and the way Bank Nifty is witnessing the supply pressure, we believe that and India VIX, that's the fear index, has already moved up. So these all parameters are indicating that possibly Nifty may attempt to give breakdown below 23,800. So I think those who are already sitting in profit in their positions, I think they may trim down some position if you have those position for short-term trading perspective. But for long-term investor, I think again this fall of market is again giving the opportunity. But I think one should wait for this fall to settle down at certain level, then only to deploy a long trade. I don't think today is the day where one should jump and deploy to buy these dips, because it's still a global sell-off is there. There is no reversal at all in any of the indices at the global market as well as in our market. So I think one should wait for Nifty to settle down at certain level. Then yes, again this falling market is giving you opportunity to deploy some of the your capital or investment in quality stocks.
Right, Rajesh. Samir, just a quick view on what you would say about the longer term investments, because I have a confession to make. My SIP is due today, and I haven't put that on pause. I would think that for the long term investor, it's not, of course, it's not something to scoff at. It's not a small cut, it's a large cut. But what would you say to the long term investor?
So honestly, if you ask me, we've been saying this to long-term investors also for a while, that look, this is not the right time to get into the market, for the simple reason that what are the returns you're going to walk away with at the end of 2-year period, right? Because valuations are stretched. So if even earnings catch up with valuations, we've always been of the opinion that your returns are going to be very low teens or even high single-digit kind of returns over a 2-year CAGR returns we're talking of, which is not something exceptional. Now, what you rightfully said, you have an SIP like you. There are tons of people in India who have these SIPs ongoing who are not going to cut them for a one-day fall in the market, which is of this proportion. And because of which the valuations of the market, which are elevated, will continue to remain at elevated levels, because at some fall, let's assume the market falls another 2%, right, from here. These mutual funds, which are sitting on almost 1,40,000 crores of cash, will come in to buy into the stocks that they like and where they feel the relative correction has been good. So they will kind of continue to support the market at these higher levels. However, having said that, this correction was long overdue. We've been saying for a while that the markets are due for a correction. It's been defying all logic, defying all bad news that has come into the system. Now, finally, some amount of rationalization, but how short-lived this is going to be? I think it could be short-lived. I think you will see maybe another 2-3%, and then you'll see the markets bouncing back with the kind of money flow that is there in India.
Yeah, absolutely. Fair point. And the point that you were making of over 1 lakh crore sitting on the sidelines, just with the mutual funds, in fact, and that will be deployed as and when it's required. Let's kickstart the query segment. And quite a few of you have written in. By the way, that number that you see on your screen, if you're tuning in for the first time, that's where you send your questions. And if you've got specific questions about why this event is taking place or why the selling is taking place, don't hesitate to ask. The first question we're taking is from Vinod. He's writing in from Chennai and he's asking about 5 stocks. I will list those stocks. Samir, anything that catches your ear, perhaps you can talk about Morpen Laboratories, Jamna Auto, Balmer Lorry, ONGC and Hudco. Which of these stand out today and which of these would you buy based on the fundamentals?
So if you ask me which I would buy today, I would probably consider ONGC. I'll tell you why I'm looking at ONGC. There is a lot of talk about Iran attacking Israel, and this is probably going to happen soon. In fact, you had the US Defense Secretary saying that, look, it could happen as soon as one day. Now, if something like that happens, what you're going to see is oil prices spiking up, and that is a beneficial for ONGC. Of course, the government will take it away in some sort of way by increasing their, what is that little tax? I forget the name of the tax they call it, but they'll increase the tax on crude prices, so ONGC won't get the benefit. But at least some amount of the benefit of increased crude prices could come to ONGC. We believe the Middle East crisis is not totally over. It can escalate. So that would be one of the reasons I look at ONGC. Strong business model, strong cash flows at the end of the day. So the others, I mean, I don't cover that much. I mean, those many of them, so I don't have a view.
Yeah, that's a fair point. All right. Let's run through quite a few of the questions coming through right now. So let's take as many of them as possible. The next one's on Rajesh Exports, and this one's for you, Rajesh. We've got Gilson, who's bought at levels of 306, and he's looking for an outlook over the next 18 months. He's bought at an average price of 1,306, or okay. I'm not sure about the price. In fact, I should pull up the chart and see where it's currently trading. It's 306, not 1,306. There was a mistake in that plate. He's bought at 306, and he's wondering what to do. Rajesh, what's the view?
So stock is now, shown, breakdown below 20-day moving average, and now stock is trading at 50-day moving average, which is placed at around 294. If any breakdowns happens below 294, then there could be further more supply pressure we can see towards 285. Anyhow, stock is in downtrend. Stock is moving in falling channel on a daily as well as on the monthly chart. So we believe that any pullback should be used as an exit opportunity in the stock. The major supply zone for the stock on the higher side is placed at around 330 level. So I think if you get any opportunity in some pullback towards your cost, or so you should try to exit in the stock, as overall structure for Rajesh Export is on the bearish side.
It's not too far away from the buy price, so perhaps now is a good opportunity. Rajesh Maheshwari is writing in from Indore. He's asking about Global Spirit. And he's got 200 shares, which he's bought at an average price of 1,242. What's a short to medium term outlook on this stock? Is it advisable to remain invested or should you sell? I will come to you on this one, Samir, because generally you say that a spirit company is not something that will be affected by global factors. At least I would think not, right? At least the fundamentals should not be. If anything, it might actually see higher sales based on people, trying to drink their sorrows away. What would you say about that? And would you say that you should hold on?
Absolutely. There is some amount of resilience when it comes to companies like this. Global Spirits, unfortunately, is not in my coverage, but we are saying that the business that they are into is quite positive. UBL and United Spirits are two companies that we do cover, where we find valuations a bit extended. So even though we like the long-term prospects of the business, we are saying that this is not the time to get in. And we've actually, if you're holding, you can continue to hold, but it's difficult to say that valuation pre-ratings are possible and growth is going to ensure that these stocks continue to move up. Global Spirits, no actual coverage, so I can't really comment.
Fair point. All right. Brigu's got this next question. He's holding ITC at levels of 500. Let's pull up the chart and see where it's currently trading. It is at 487 despite, okay, it's actually holding on with cuts that are far lower than what you're seeing across the board. And he's got a 2 to 3 week view. He's got a leveraged position. He's asking whether he should book a loss or should he hold out for a few weeks. Rajesh, dangerous to have leveraged positions in this market. What would you say? What advice would you give?
Yeah, in this kind of market, yes, it's very difficult to hold the leverage position because the way market is falling, I think ITC is also under pressure because of market volatility. But still, the stock is holding about 20-day moving average. So I would suggest here to keep a strict stop loss of 480, 478. This is the two level where he should keep as a stop loss. Because if it breaks below 478, then furthermore sell-off would be there. Then 460 would be the next level for the ITC. But at this juncture, I think still stock is trying to hold out above 20-day moving average. So I think he may hold the position with stop loss of 470.
Coming back to you on IREDA, and this is a question coming from Sandeep Khatare. He's wondering whether this is the right time to buy with 5% down. And maybe we can pull up the slightly longer term charts over the last month or so. This is, of course, a stock that has run up quite a bit. The 12 months, it's still up quite considerably. The last month, it has still gained about 5% despite the fall today. Would you suggest a fresh entry for the next 6 months, Rajesh?
So I think the way stock has corrected from its recent swing high, I think IREDA again, if it comes near to 220, then I think he may needs to average out certain more position because it's a very important and major support area for this decline. So IREDA
clarify that, Rajesh. Let me clarify that. What he's saying is that he hasn't yet bought. If he hasn't bought, would you suggest a fresh entry?
So I think wait for 225 to 220 zone where again the stock is having good support area. He can add positions around those level, which is important, and risk to reward would be in favor for IREDA around 225 level. At that time, he can keep a stop loss of 215. On the higher side, 250 is the resistance zone. If it crosses those level, then yes, there could be a possibility of rally towards 270, 75 also.
And I think everybody tuning in will have seen Samir shaking his head quite noticeably when I asked whether it can be bought at the current juncture, and that kind of answers the question on the fundamental side as well. Tata Steel is the next question. Samir, unfortunately, we're getting a lot of short-term questions. I will come to you on a fundamental one soon, but Tata Steel for the short term, bought at levels of, or rather, we don't have a buy price. Sarvesaran is asking whether or not is the right time to buy at this juncture for the short term, at least for this week. What would you say, Rajesh? Very short-term view.
So Tata Steel, most of the metal stocks are, hammered in today's sell-off. I think Tata Steel is also now on a verge of giving breakdown to its previous swing low of June 2024. So I think if it slips below to 148, there could be a possibility of furthermore go downside towards 139 or 138 level. So that would be the next level for Tata Steel on the downside. But still on the higher side, 160 is the supply zone as of now. So until the stock not crosses 160, it may remain under pressure. And possible downside we can see towards 138 for Tata Steel. Okay.
Poshak Limited is the next counter. And Samir, I'm hopeful that you have a view on this one because we've got Vinay from, I don't know where, but Vinay is asking about this. He's bought at 6,000 levels. It's currently at 5,725. Should he hold on?
Sorry, these are companies we don't cover.
Okay, that's a fair point. It is not a very large company. It's got a market share of just about 1,750 crore rupees. Rajesh, any view on the charts?
I'm sorry.
Not enough data. Okay, fair point. All right. That's all right. We have to try and get views on this. Viewers, understandably, very small companies, it's a little difficult to get you a view. Patel Engineering is the next one. Shahul is holding at levels of 62. Samir, view on this one?
I think one can continue to hold it. The engineering space, the construction and engineering space is going to continue to do well over the next few years, given the fact that we're going to see a lot of capex coming through. They cater to that kind of a business model as well. So when the order flows continue to trickle through and we see the execution continuing to see an uptick, we will see the profitability increasing, which will probably run up the stock a little further. No doubt it's moved up over the historical levels. But remember one thing, this is a cyclical business. So maybe a year and a half down, once the positivity of the order book is all factored in, then one should take money off the table because, we've seen that historically, whenever these cyclical stocks move up because of strong order book and things, eventually they start coming down.
Yeah, okay. This is a question from Roshni, and she's bought Reliance Futures at 3,200. Stock is currently at 2,886. I'm assuming she's talking about the August future. Rajesh, what advice would you give her?
It's a way below to the stop loss level because in futures, so always one should keep a stop loss. 3,200 is very far from the current market price. So already stop loss, she should be around the 3,100, but now she's already in loss. My advice would be try to exit if you get any pullback towards 3,000 mark. But again, it looks very difficult looking at the market condition because the stock is now slipped below to 20-day, 50-day moving average. And looking at the structure, it's now penetrating to its multiple support zone area, which is placed at around 2880. If it slips below to 2880, then further more supply we can see towards 2800 level also. So I think either they can add some put position to, at least to hedge this downside. Try to buy at the money put option to hedge at least to protect this downside, which is, visible on the chart at this level.
Yeah, quite considerable. A persistent system, Samir, we're trying to fit in a couple more. We've got Mahesh, who's holding 3,500 that he's bought at levels of, I'm not very sure about the buy price. He says it's 500, but I haven't looked at the long-term charts to see when he's bought this. He's looking at a 2 to 3 year time frame. Would you suggest holding on to this?
Given the kind of purchase price that he has, I think he can continue to hold on. Look, I'm expecting the IT industry to go through a bit of a consolidation because honestly, if you ask me, yes, it consolidated, but you've also seen a bit of a run-up far ahead of what the fundamentals should justify because I don't think there's a very clear picture that is coming out from the international markets that the spending on IT is going to see a big major uptick. Companies are still guiding from 3 to 5%. In fact, Persistent has been one of the outperformers, if you ask me, when it comes to the top line growth and the profitability growth. Hence, you've seen a massive re-rating and it's trading at valuations which are similar to the larger caps, if not a little higher than some of them. Okay, so I think that there could be a possibility it consolidates, but since your purchase price is 500, ride the wave over the next 2 years. I think there's more money to be.
Okay. Unfortunately, we are completely out of time. Samir, Rajesh, thanks so much for taking the time. Viewers, I know you have a lot of questions. And we will be back tomorrow at 11:30. Of course, we have live market coverage through the day, and that continues at 12 today. But lots to talk about, of course. And do stay tuned. Keep your questions ready and send them to us. We'll take them tomorrow at 11:30. Do stay tuned.
welcome. You're watching Market IQ. I'm Mahima Vachrajani. Well, before we move on to what we have on the show today, we're going to talk about the IPOs this week. Let's take a quick look at what the markets are doing. Well, it's an extremely choppy day for the markets. Nifty and Sensex have plunged nearly 3% after the kind of global sell-off that has taken place. Even if we see the global indices, the Nikkei is nearly down 13%, but let's take a look at what Nifty is doing. Nifty is down nearly 3% now as we speak, down 720 odd points. Let's also pull up the Sensex. Sensex is also down nearly 3% as we speak, and it's down around 2,400 odd points. But let's also see what the broader markets are doing, because the pain is worse in the broader markets. The Nifty mid cap 150 is down around 3.7%. The small cap 250 is down nearly 4% now. Let's also quickly pull up the Nifty contributors. Well, in terms of what is weighing down the Nifty at present, it's Reliance 87 points, HDFC Bank 80 points, Infosys, ICICI Bank. It's all the FMCG names that are nearly doing well, which is HUL, Tata Consumer, Britannia and Nestle. Let's also quickly pull up the sectors. All sectors as we speak are trading in red right now. The highest hit has been taken by Nifty Metal, Nifty PSU Bank, Nifty Realty, Nifty IT, Nifty Media, all down 4%. All of these sectors. Let's also quickly pull up what's doing bad in the Nifty Metals, constituents of Nifty Metals. What are the worst performers on the Nifty Metal? There you go, all in red. SAIL down 6%, Nalco down 6%, Hindustan Zinc down 5.8%. Let's also quickly pull up the breadth of the market. Of course, the breadth of the market is skewed towards the seller today, but let's see what the chart looks like. Oh my God, there you go. There are 20,000 odd declines versus just 106 odd advances. But let's put the spotlight on India's primary markets, which will remain buzzing this week with the opening of two IPOs, Brainbees Solutions and Unicommerce eSolutions, and two IPOs already open for subscription, that is Ola Electric and Seagull India. And also, we have three new listings of Acom Drugs and Pharmaceuticals, Seagull India and Ola Electric. To take this forward, we will be joined by Gaurang Shah of Geojit Financial Services and Sunny Agrawal. But before I come to both of you gentlemen, I'll quickly move to Mihika and to take this up to the list of IPOs on our watch list.
Yes, so up first is Brainbees Solutions, which is the parent firm of online e-commerce platform FirstCry. Now, the total issue of over 4,190 crores. It has set a price band between 440 to 465 rupees per share, and the initial public offering will open on August 6th, which is tomorrow. Then second is Unicommerce eSolutions, which manages commerce operations for brands, sellers, and logistic providers. It will open for subscription tomorrow as well, that is August 6th, with a price band of 102 to 108 rupees per share, and it has a total issue size of 277 crores. And also the much awaited IPO of Ola Electric has already opened on Friday and was subscribed 35% on day one. As of today, on day two, the total subscription was over 62% or 0.62 times. We also have Seagull India, which was subscribed 1.23 times on day two, and today's IPO has subscription has done better at 2.18 times. And lastly, the three main board IPOs that you need to watch out for that will debut on national bourses this week. Up first, we have Acom Drugs and Pharmaceuticals, Seagull India, and Ola Electric.
Right. Mika, thank you so much for giving us those information and summarizing the IPOs this week. Gaurang, I'll come to you first. Gaurang is the head investment strategist at Geojit Financial Services. Gaurang, my first question to you is on Brainbees Solutions. What are your views overall on this IPO? Because I want to understand that how their revenues have increased 5% year on year. However, they're still running into losses of roughly 320 odd crores. So what is your overall view on the entire IPO that is coming out?
Thank you and good noon to all of you all. Not a direct recommendation since we've not covered this particular company, but whenever a company goes and hits the street, and if the company is carrying losses or the company is very close to break even, the interest amongst the retail investors tends to be a little bit lackluster. primarily because large part of our investor base has got used to looking at listing gains rather than looking at the growth story of the company. So I think the management will have to possibly do a lot more than what they've done in terms of turning around the company's profitability and bringing it in the positive side. In terms of opportunities, well, the company is placed well to take advantage of the opportunity, but at the same time, they need to do something extraordinary in terms of getting retail investors investing in that company from a long-term point of view.
Right, absolutely. We are also joined by Sunny Agrawal, who is the head of fundamental equity research at SBI Cap Securities. Sunny, I want to understand that, margins for retailers are usually higher. But in this case, since the company is in losses, the margins have not